Oh man. All right. Hi guys. Hello. It is another Thursday night. We are here obviously with my friend Brian. You've seen him before. And we have been having some technical difficulties tonight. So you're gonna have to bear with us. We're starting
Yep.
a few minutes late. It's all right. All right. So those of you that are joining us, do me a favor and go into the comments. Let us know where you are watching from, because it's fun to know that. And it's always cool to find out that somebody you see on the chat or someone that, I don't know, lives in the same area as you. So put it in the comments. Let us know. Last week we were talking about snow, Brian, because the north and northeast got a whole bunch of snow. I got pictures emailed and texted to me from these awesome people for the next 24 hours because I love snow. So yeah. Anyways, it's been a day. Put on top of all of the.
It's the quarter Q4. Q4 will do that to you. Definitely when you're in real estate.
It's like it's the very end, and most realtors, most people that I know take off this time of year. They're like, nobody's gonna buy houses over the holidays. Like, I think that's wrong, Brian. Yeah. What do you think?
Those people don't have children, so I'm just gonna leave it at that.
Or, I mean, we are so busy right now. It's ridiculous. We are not only we've got kids and we're doing Christmas programs. Is your daughter doing Christmas programs yet?
Oh man. Yeah, we've already had Thanksgiving one. We got a Christmas one coming up next week. Or I'll have to check the family calendar. Listen, I'm doing my husbandly duties. And that is remembering to forget the important dates. So just throwing that out there, all the husbands, I need support whenever I can get it there.
Just solidarity. I know your wife appreciates you.
Yeah, all the wives are out there like that poor woman. Yeah.
Yeah. So for you guys that, man, Brian, it's been a while since we've had you on the show. So let's see here. We took a break. You haven't been on since this summer, if I'm right.
I haven't been counting.
Yeah.
I'm always honored to be a part of the live stream. So
it's a lot of fun. For y'all that are, for people that are joining us, I'm going to let you introduce yourself really fast, because I think I've introduced you. You introduce yourself. Who are you? What do you do? Why are you even on this thing?
Yeah. Brian McIntosh. See the name? Wait, the name. There we go. Got to get it right. Yeah. Mortgage lender, local mortgage lender to the upstate South Carolina. Dad, husband. So I'm a dad of two, new dad of two. So I'm a girl dad, boy dad, dog dad. So yeah. And running around my head cut off. He said we're busy. I'm busy. And so yeah. That's me in a nutshell there.
Yeah. A brand new dad to two. Like your son is a month old. 2 months old?
2 months old. Yeah, just a little over 2 months old. So you know what's funny? Yeah, you've been through it. You've been through it a little bit more, a few more times.
Just
one more time than me. One more time than me. But went through it the first time. We're like, okay, I think we got this. Second time, we at least have an idea, and it's just, man, I'm getting beat up. I had no idea what I was stepping into, but it's all good. I love him. He's cute, adorable. Good thing he didn't get my looks. So
he is adorable. I was telling him today that I got his Christmas card was the first one that I got for this season. So it's exciting.
Oh man, the first one,
the very first one. So you give your wife props for me, because she got those things out.
I already did, by the way. And I got a question for you on this, because we noticed this ourselves. Are the Christmas cards coming in slower this year than previous years? Curious, what are you noticing that? We're the first one.
Ooh.
And that came when? When did that hit your mailbox?
I mean, that hit. I've had it on the counter now for at least since last week.
Okay.
Yeah.
Y'all out there are
Michael,
slacking.
yes,
I'm
we
just
get
saying.
Christmas cards. See, we need to
Oh
send, look, we need to send
man.
Michael a Christmas card. And this is a thing. And if you want to send him a Christmas card, I can make sure he gets it. So,
hmm Yeah, that's the thing. That's just been a thing. My family, we've done Christmas cards, stick them on the mantle. Growing
my
up, we
mom
had
had like these little clips that you hang them up in
yeah.
between doors. Yeah.
Oh, so we growing up, we had the cardboard wreath, and you would stick the cards in there, and you have a big wreath of
You
Christmas
do that
cards.
too. They end up living on my refrigerator for months after Christmas.
Yeah, I was gonna say that. It's like March, and you're like, okay, I think it's time to get rid of it. Sorry,
I think
Smiths.
we see you later, Brian. It's fine.
You're right. Your family's adorable.
So here's the deal. For people who are joining us, yes, put in the comments where you're watching from, but let us know. Do you get Christmas cards? And to answer your question, Brian, I actually can say that I got the Christmas cards that I consistently get year over year over year. Those are the ones that have come in first. So
That's fair. They're
my
on top of it.
people, the people who are like Christmas cards go out, and then I get a few different ones the remainder week or two before Christmas. Occasionally, I even get one or two after Christmas.
I got a fun question too. I want to add to that. Do you
Okay.
do Christmas cards for those? The other question is, so if you got a Christmas card, so for example, we've been living in our house for 3.5 years. We are still getting Christmas cards from families to the previous family that lived here. We still clip it and hang it up with all the other ones. Is that weird?
Yeah. No, I mean, maybe a little bit. You just go, thank you. Merry Christmas to you too, person. Add them to your list. Send them a random
right.
card from you.
Here's what I want for Christmas, by the way.
This very expensive water bottle that lights up on the bottom. Here we go. Oh, it's so funny. Oh, I love it. Let's see here over here in the comments. Of course, we have the Walshets from Jamesburg, New Jersey. Absolutely cold. Then we have Eric. Eric saying hello. And John says, congrats on the new baby.
Thanks, John. Thank you.
And he also says that he gets a handful of Christmas cards, but not as many as he, man, we got to change that. We got to get you some Christmas cards. Okay. So, Brian, we've been chatting recently, like today.
Very, very recently.
Very recently. Just about, I love comparing notes with you about what happens on the lending side of things, and then also like in comparison to what me and the team see on the real estate side of things, like the actual transactional, we are like going out and finding the people who are buying and selling houses. So how was your 2025?
Phenomenal. I'll say that. Yeah. I think for you guys too, I think we could speak the same on this. Is both of us have had phenomenal years, and I don't want to steal your thunder in the sense of like, I know this is your trumpet to sound here, but what I find really encouraging for both of us is that we're finding success in a market where people are shouting from the mountaintops that this is a terrible time to buy a house. This is the worst housing market ever. And when I say I'm doing phenomenal, and just you asked, I want to answer real quick.
Yeah,
I'm up 40% over where I was last year.
Holy moly.
And so, yeah, and that is nothing much different that I'm doing other than having stronger partnerships, working with great real estate agents like you and your team, right? And I think that connection, the way we do our business, I think we set a clear path for homeownership for a lot of people. And I really think that's going to be the key there. But yeah, I mean, it's been a phenomenal 2025. So if you ever hear what either one of us talking about 2026 being a great breakout year for the real estate market, it's not because we're just trying to be motivational and inspirational. It's because there's a lot of data there behind it to drive that thought.
Well, and that's part of what what I wanted to kind of chat through tonight is one, really before we dive into all of these numbers, I really want to give our listeners, our viewers, a really good current read on the Greenville market and what we've seen in 2025, what we're seeing like at that base transactional level of being able to go through and say, okay, like this is what people are actually doing. It's not just us hyping it up or inflating numbers or anything like that, but it's also, I wanted to really go through and say, okay, like, what are you feeling as far as like you deal with buyers and you deal with sellers in a different way. And I want to talk about that here in a second, but
Sure.
you deal with buyers in such a way that like you are ground level, like they got the contract. What are you feeling as far as like maybe what's the comparison from maybe the beginning of the year to right now? Like how's the buyer mindset as far as for 2025?
Oh, okay. So that's an interesting question. The buyer mindset from just make sure I hear you.
I have
From
an
how
answer
is
to
it?
it too. I want to hear it from a lender's point of view.
Sure. I would say at the beginning of the year, and it's actually this is going to be data driven. I'm very data driven kind of
Okay.
person. I don't like to. I think sometimes we can be very guilty on basing our decisions or things we say based on what we feel. In this case, I'm gonna say this is data driven. A lot of
Okay.
times at the beginning of the year, we're talking about a mindset, especially when people come to me for those pre-approvals and how we're navigating what their wants are and what their needs are.
Mhm.
We start at the beginning of the year. We're getting, I think a lot of times at the beginning of the year, we're getting people who want to buy sooner than later. And then
Mhm.
as we, and you, I think you may experience this on the real estate side, but as we get
Mhm.
into the second half of the year, that quick turn time, that quick, hey, we need to get into a house within the next 3 months turns into, hey, maybe we're looking at doing something 6 to 8 months from now. So a lot of times that second half of the year,
Yeah.
that mindset changes to the beginning of the next year. So really, I think when it comes to home buyer, especially in 2025, we're starting to see seasonal transactions
Mhm.
versus transactions based off of rate. So we're kind of going back to something where I would say is more normal to what we used to experience prior to 2020 is what I would say.
Mhm. Yeah. I feel like as well that we're going back to more of what the real estate market felt like in like 17, 18, like those
Mhm.
years, just where interest rates are pretty much normal, like everything's just standard. There's not a big flux in it.
Mhm.
Um, I also like we during the COVID years, so 2020 to I would say the beginning of 2023, um, really was the stretch of it. We saw like there was this urgency to get the interest rate and hurry up because there's not a lot of inventory on the market, and everybody was afraid that they weren't going to find a house. And then all of a sudden, it was like, boom, 7.5% interest rates.
Yep. Nope. You hit
And
a wall.
yeah, and I think it shot there. The shockwave from that was so huge, and it just absolutely reverberated not just that year, but throughout 2024 into
Mhm.
this year. And now what I'm feeling is more like that. Hey, like we have a second to put our house on the market, and oh, we can negotiate this buyer. And there is a little bit of a sense of urgency, but it's more of like, hey, it's time to make a move, not a like pulling my hair out.
Yeah.
So
Right. You have time to think about it.
yeah, definitely. And it's definitely like so that's I don't know, that's been my I feel like more people as well are coming and correct me if like see if have you heard this happening too? More people that maybe didn't buy or sell in 2020, 2021, and 2022 are now making the decision to buy and sell. Have
You
you
hate it
seen
for
that
them.
on your side?
You hate it for them. I haven't come across too many of those this year.
Mhm.
Uh, and if I did, I would treat them with kindness because hindsight's always 2020, and they're probably going into, oh man, I really wish I'd done it. Um,
Mhm.
one of the stories that sticks with me, there was a couple that I met in 2020, fall of 2020, talking about
Mhm.
rates. Hey, this is a great time. And listen, I'm going to say that a lot of times because if you're buying a house for the first time, today is the best time to buy the house. Okay. Um,
Yeah.
Fast forward, they waited 2 years. So going to 2023, they're like, hey, we're ready to do it after telling them 3 times we need to do it. And I say, hey, look, I just want to tell you right now, if we bought in 2020, we're talking about today, you selling your house because you guys are going to grow your family, you would have had $75,000 of additional equity to work with. That means 75 grand that could have gone towards your next home purchase, right? Let alone the fact that, you know, you could have used that to buy the rate down. So there was a lot of things that, good that came out of it for those who took advantage. For those who didn't take advantage, I hate it for you. But again, you'll agree with me. Today is the best time.
Today is always the best time, and don't
Yeah.
wait. So as we're going through all of this, like I just want to encourage our audience, if you have questions about the market or about interest rates or how mortgages work or just hey, this is what I'm looking at, can I do it? Put it in the comments. We would love to answer your question. I know, Brian, like you're super detailed and we go through and actually bring it down to their level. You do that really well for the I don't want to say the average consumer, but like the average consumer, like you do that really well. So there's that.
Appreciate it.
And then I also want to remind everybody, we've got this fun QR code that is up on the screen. It's on Brian's side of the screen tonight. And there you go. And just want you know that if you scan that QR code, that is a great way to connect with my team. And if you find anything tonight, you have more questions, or you want us to connect you with Brian, we would love to do that. Just scan that QR code. Just do it now. You've got your phone in your hand right now.
I think this hand works more appropriate. This right here.
Yeah, there you go.
Yeah, working on it.
So, before we move on here, though, I do have a quick question. I see this over. This is a good one for both of us. Are there any drawbacks to paying cash for a house, or is it better to carry some amount on a mortgage? What you got for us, Brian? Because I've got some thoughts, but I think you have a really good viewpoint on this.
Yeah.
John says for a retired couple.
I'm curious. I'm curious to know what you think I'm gonna say. I'm curious to know what you think I'm gonna say. You say I have a good viewpoint. I'm curious. I'm not trying to put you on the spot. I'll just.
It's fine.
I'll say
I'll answer. You can put me on the spot,
okay.
or you want to put John on the spot.
Oh no, I don't want to put John on the spot. John put us on the spot.
Okay,
so we'll take the spotlight.
Us on the spot. So I think you're going to say we're going to look at the full picture. We're going to look at the financial picture of what actually is going to be best. Is it going to be best for their financial situation to pay cash for the house so that they don't have to worry about any type of increase of I don't know, what if something were to happen if you're retired,
right,
etc. At the same time too, Brian, I know that you've also ran scenarios for people that we've worked with that you've said, it would work for you to keep this liquid or to have this asset here to be able to draw from because you look at the entire picture. So I'm going to say that you would give either answer based upon a specific person's situation.
I love options. And I think that's what I love about my job is mortgages is just not one. It's not cut and dry. There's not one path you can run down. And I know we're talking about potentially paying cash, and that's not a mortgage, but it's still an option. So if paying cash is an option, that's great. So to your point, I still love breaking down. Everybody's scenario is a little different. I know what John was talking about for retired people. Well, you could be retired and have no debt. What if you're retired and you have some debt? I do have people who are retired and we have car payments and things like that. So we could break down and look at cash flow for your case, or maybe the one thing that works best here, and it's something I love to say, the best house payment is no house payment. So if you can have the house with no house payment, that might actually be the best house payment. So the drawbacks really, I would say, just come down to your financial situation. If we're just talking about property taxes and just in general drawbacks, there's no drawback to paying cash. I mean, if you can pay cash financially, that's going to be the cheapest
Do
option.
it.
Mhm.
Got it. Cool. That's a good question. Thanks, John. We've gotten that question before quite a few times, just in our
Yeah.
day to day, because we get people that come in and say, "Well, what about this?" And I
Well,
often,
yeah,
yeah.
you go back to 2021 and there's a big difference between saying financing this house at
Oh,
um
yeah.
right 6.5% versus, let's say it's in 20, and everything's hindsight, right? We are in 2021, you finance a house at 2.5%, and let's say you've got $300,000. Stick that 300K into the stock market and let it go crazy, because that's going to grow. If you'd have done that, and now you fast forward 4 years, you're sitting on a ton of money. Not only that, your house, the appreciation value of your house has grown. So all that's happened is your assets have grown. So it could also be again, situational.
Very true. Okay. So this year has been, I mean, it's been a good year. I will say it's not been a good year for everyone, because for a few people in our industry, that like it's either been you had a great year or you've had your worst year. Like I don't hear of much in between. And what I do keep hearing about is that 2026 is going to be a great year. Like I keep hearing it. They, economists, whoever we want to talk to. I know that you've seen this, heard this, etc. And I really think we need to. I want to talk about where we think 2026 is going. Also talking about interest rates and like, is 6% it? Like is that where we're staying? Is it even going to be affordable to buy a house for my 30-year-old brother who is just getting started in his career? Like I hear that all the time. So what would you say as far as like affordability, interest rates? We had a really cool graph too that you pulled up for us this morning that I thought would be interesting to talk through.
For interest rates. Well, I want
Yeah.
to touch on the affordability thing real quick, and then
Yeah.
we'll hop into the rates. The affordability has been a very hot topic, rightfully so. We've seen home values jump up so quickly in a short period of time that at the period of time at 2.5%, with the home values jumping up, was still attainable for a lot of people because the interest rate was so low. But with the rates jumping up, which was manufactured, by the way, it was intentional for that to happen. It just wasn't an accident that rates jumped up. That didn't cause an affordability crisis. One thing that you're not hearing about headlines on the news is about how we're talking about with income, and I don't have a chart for that. I was working on it. I will have a chart sooner than later. But when we talk about income increasing, income has increased. And you'll see places where say, well, it hasn't increased at the same pace as home values increased. And they don't have to for homes to be affordable or financing to be affordable. But what is true is we got to wait for income to catch up. I think home values got way ahead of income. The interest rates were so low that it made it attainable. So when we talk about affordability, that's going to get better. It's going to take several years to get better. I think the urgency of trying to increase more supply, I get it. We want prices to come down. But the way the market works, I just don't see there's not going to be a huge rush of builders going, we need to keep building houses. Because I'm going to tell you right now, what builders don't want to see is they don't want to see their prices go down either. So give it a few years, let incomes grow, right? And then we'll see affordability start to peak around the corner, and that won't be as much of a crisis anymore.
Quick little comment though about builders. We are seeing prices go down. They don't want
Yeah,
you
I
to.
remember you and I talked about that a little bit, I think a couple weeks ago, maybe.
Yeah.
Which is
Are you able to compete with builders yet?
not with the incentives. That's the
Okay.
tough part when you talk about in-house. Now, that's been a big thing too. Builders are suffering something called margin compression. So you talk about a normal market, builders are making, this is crazy, they're making about 30% or more profit margin in when they're selling. Right now, we're seeing some builders getting somewhere around 14%
Woo.
margin because they're paying about $20, $25, $30,000, offering those 4.99s. And then they're
Yeah.
also forking over 15 grand to help pay for closing costs. So they're giving up a lot of money. Some builders are also offering extra compensation to real estate agents to bring business to them. So
Yes.
the last thing they want to do is lower prices. They'd rather keep
Mhm.
their rates low, because here's the other thing. If you're going to go and buy, and I'm not trying to talk anybody out of anything here, but if you're going into a new neighborhood, right, you don't want to buy a house where there's a potential where the builder is going to sell the next house for less than what you just bought it for, right? That's kind of yucky. But I
Yeah.
also see the allure. And here's the thing, I've done it, buying a house at a low interest rate in a new build neighborhood. And here's the thing, if they sold the houses for less, a little bit lower, that's okay, because here's the thing, and I talk to all of our clients about this. Buying a home is a long-term investment. You got to plan to live there for longer than 2 months. Like, plan to live there for 3 to 5 years. And
Yeah.
so if you have a dip in value in your neighborhood, all good. It
Mhm.
will recover. History says it will recover. So I want to put that caveat on there, because I don't want to scare anybody by saying that when we talk about those prices coming down. But it's a real thing for some of those builders, though.
Mhm. Yeah, it's definitely and some builders are knocking out of the park. Others, not so much. And
Right.
it's coming down to like quality and options, because
I've got a
like,
question for you too, by the way, on this builder.
ooh,
Sorry.
okay.
Question. So tell me about what you think, because I've heard on national scale that
Okay.
buying a new home is actually cheaper than an existing home. So they're saying existing homes are more expensive than a new construction. But
Mhm.
one of the things that I think about that is, what about size? Like, what are we looking at a comparable home?
Mhm.
What are you seeing on new construction as far as size of
Oh
homes?
my word.
Are they getting smaller and the price is going up? What's your take there?
The yards are getting smaller.
Oh, yeah, the lots.
Um, Yards are getting smaller, and maybe some houses are getting a little bit smaller.
Okay.
I have a great example. I have a resale listing at 202 Montview Circle. It's a house that's been built within the last 5 years, so I would consider it still a new house. And all of the kinks have been worked out of it.
Mhm.
Now, that house is listed at 550. You can go 10 minutes down the road to a beautiful new DR Horton community and buy a house that is similar square footage, similar floor plan,
Mhm.
similar finishes, maybe a little bit like a half grade less in quality of finishes. And you can buy that house for $20,000 to $30,000 less with $10,000 in closing costs.
Mm.
But the big difference there is you have a yard that is that's oh my goodness, it's not even a quarter of an acre. It's a tenth of an acre.
Right. Yeah.
And that's
Yep.
what you're giving up, is you're
Been
giving
there.
up the space.
Yeah.
Literally, you can put your cup of sugar out and say, "Hey neighbor, help me out."
You
And there's your neighbor. That's what
you
I'm
can
seeing.
watch TV from your own living room, from their living room, right?
Exactly. Your speakers aren't working and all you all those
um,
things.
yeah, because we bought it. We no longer live in it, but we did buy a new
Uh-huh.
build in 2020. And I remember
Yeah.
when we sold it, and granted, the home value shot up, but I remember when we were looking around us and we were seeing some of
Mhm.
the smaller one level houses. We were in a 3,100 square foot home. And then we're
Mhm.
seeing houses at 2,400 square feet selling for over what we paid for that house a year prior.
Mhm.
And so just, it was an interesting take, because we live in a house that's 20 plus years old,
Mhm.
versus where we used to live. We got more yard. There's just differences. So I guess the other thing I want to ask you
Yeah.
is, because I want to get this from your opinion.
Yeah.
Um, Tell me, what do you think justifies the existing home being a little bit pricier than maybe that new
Mhm.
construction?
Well, okay, man, that's always going to be hard, because people almost always go to brand new, shiny, nobody else has lived
Mm,
in it, and nobody else has lived in problems. Um, y'all, it's not a used car. That's different. Uh, honestly, I really wish people would ask this question more. It's really hard to say no to something that is brand new.
Right. That's fair.
What I'm going to find, what I have found though, more often than not, with people who purchase brand new homes, is they end up with settling issues, or just they've lived in the house and maybe like we had this problem where a screw was put in just a little too long, too far, and it was like really close to a wire and it was arcing to the screw every time. And it took us months to figure it out. But it was just, it wasn't something that was done wrong. They just screwed it in just a little
Didn't
too
catch it.
far.
Yeah.
And but then it threw my entire kitchen, like breaker every time.
Yeah.
And it's stuff like that with a resale, you don't have to worry about. It's already been figured out. And so I think resales, there is something to be said for character that is given to a home that has been lived in. Maybe somebody's done more upgrades to it since the builder. For example, there's another home that I know of within about 10 minutes of where I live that they bought that house 2 years ago from the builder, upgraded absolutely everything they could with the builder. They bought it for like $550. Maybe, and it was a Mac Daddied out house.
That's awesome.
They went in and they redid all the carpets, they redid all of the cabinets, they redid all the countertops, they did fantastic bathrooms, they redid the deck, they put in all new grass in the yard. Just like they just added and added and added, put in built-ins, and those things add value. That resold for cash for $750,000. Nothing in the area, nothing comped it. It didn't make any sense. Somebody wanted to be in that neighborhood and they wanted to be in that established area. So I think that's something else that a lot of people will pay for. And that's why they do end up paying more for a resale house.
I like that.
Like, just it's all of the bumps have been ironed out. So
that's a great explanation. And we don't see that enough. So, thanks for answering that question.
You're welcome. So I really do want to get to like interest rates and what we were talking about this morning. Can you share your graph with us? And can we
I got it. Let's do it. Maestro.
Here we go. I got you.
Okay, cool. I had it ready. I didn't know what to
You're like, I got it.
Yeah, I was like, I'm not touching anything. I don't want to break it. So
we're like, Michael, fix it. All right. So tell us this. Rates in review 2025.
Graph time.
What is
John's this? On it. Can we do like a little music next time? Maybe a little like and be like graph time. Yeah.
Graph time.
So this is what we talked about earlier today. Just doing a rate and review, taking a look at what rates have looked like in 2025. What are the biggest things that we've been dealing with over the past few years? Just going back, my point of reference is June of 22 when rates hit 6% for the first time in a long time, and we've been dealing with something called volatility, where we just see those peaks and valleys, those spikes and those troughs. And I've got a place here on the chart on the far right where it says range bound. And what that means is just kind of, I'm taking a term, a Wall Street term, and sticking it in here, because what it really is just saying, investors are saying, all right, this is kind of where we're comfortable with rates being. So we're seeing less peaks and valleys. Yes, we're always going to have ups and downs. Rates are never going to go in a straight line. But what we're seeing in the last quarter of this year is a little tight window where rates are staying under 6.5, but we're staying over 6. So we're not getting these gigantic fluctuations that are causing the kind of capitulation in the real estate market, right? It's like, oh my gosh, rates jumped up over 7%. The market slows down a little bit. We got buyers that go, I'm gonna pull back, and then the rates come down under 6.5, and next thing you know, it's like, hey, I'm ready to buy a house. So this right here, what we're looking at, the last of this year, Q4 in that range bound area, I think is a really good indication of where we could be for the next foreseeable future in that case.
Yeah. So something that I thought was really cool, and I want to talk about this quickly, is we have a lot of people that throughout this year have said the Fed is cutting the rate, interest rates are going down. Yes, hallelujah, here we go. But then interest rates got worse. So tell us about, like, in that range. I think the easiest place to see this and explain, and then if you wouldn't mind, like, just explaining Fed rates, like how the Fed rate doesn't actually affect the mortgage rate.
Yeah. So the Fed funds rate is really about, it's the baseline, it's the benchmark rate on how banks trade or lend money to each other overnight. Okay, so that's just a benchmark. It doesn't directly affect mortgage rates. It's a trickle down effect, if you will. It does affect it in a essence, but it's not a direct, I don't want to say correlation, but it doesn't have a overt impact. Okay. So let's talk about what you're talking about. What was interesting right here when we talk about the Fed rate cuts. So we had 3 cuts this year. Number 1 was here. Number 2 was here in October, and then number 3 was at the very end of this chart. Going back right here, it was September. What was interesting is I mentioned with your team back in September, we had that rate cut, was a little deja vu was happening because last year we had the same thing happen. We saw rates come down, and rates came down because Wall Street was anticipating a Fed rate cut. That makes money cheaper, by the way. So when money's cheaper, guess what Wall Street likes to do? They like to spend it. The cheaper the money, the more they want to spend it. And when they spend it, they're buying things like mortgages. When they buy mortgages, rates go down. So what was happening was investors were buying mortgages, rates were going down. We get to the rate cut of September, and all of a sudden you would think, oh, money's cheaper, let's buy more mortgages. Well, the exact happened. We had a sell-off. And the reason for that happening was, just like last year, happened this year, unemployment went back down a little bit because we saw unemployment going up. We saw weakness in the labor market. We may have seen a little bit inflation cooling off a little bit more. And the Wall Street's like, oh, this is good for us, or not good for us, it's good for mortgages, but this is a good time to start buying some safer investments like mortgages. But then when we saw the labor market getting better, stronger, they started selling mortgages. So that's why we saw rates shoot back up. And then rates started coming back down again. Well, because we had the government shutdown. We didn't have as much access to all this data. That's risk. And that's a little scary. But at the same time, the stock market's still doing really well. We're still seeing consumers spending money. So again, we got a rate cut. And then the big thing right here, what I would say is in conjunction with what the government said, or with the government shutdown, was Jerome Powell said a December rate cut is not a foregone conclusion. And so the market didn't like that. They're like, well, we may not get a rate cut in December. So that's why we saw the rates bump up a little bit. And then coming back to yesterday with the rate cut, we saw rates come down, get a little bit better. Here's the thing. We're talking about rates coming down. We're not talking about half a point, quarter point. We're talking less than an eighth of a point. I mean, it's very small movement. So it still matters, but it's evident here that the movements are going to be less dramatic. They still matter. Wall Street still cares, but the good news is less drama is good for us. Very,
very. Okay, so question based on this, and then I just discussing this. I know you have another graph that was really good. Let's talk about maybe a little bit more future. We've got about 10 minutes left here. Okay. So we're looking forward to 2026. I thought this was super interesting based upon like what we've been through the last 3 years. So tell us what I'm looking at here.
Buyers are moving faster. Buyers are making the decision to purchase a home faster. Even though it doesn't feel
like it right now, like market is slow. So
I saw
all the graphs.
Well, here's the interesting about the market being slow is you gotta, Aubree, you've been doing this pre-COVID. So you know what the market felt like pre-COVID.
Yeah.
I know what the market felt like pre-COVID. So if you didn't experience that, didn't pay attention, didn't live it, this feels like a slow market.
It
If you
does.
look at, and I don't have the slide, I don't have the graph, John, I'm sorry, but in the green upstate of Greenville, South Carolina, our transactions, real estate transactions are increasing year over year. So our market's stabilized, it's getting stronger. Yes, it's not, 21, 22, but what we can see here on this chart is 2023, we had a shock market. You mentioned it earlier, right? The ripple effect. Rates go up. And the thing about 2023, late 2022, everybody's saying is, hey, rates are going to get better in 6 months. Okay. Well, what do you do when someone says 6 months? You wait. Well, it never happened. So in 2024, you start getting people who go, you know what? I can't wait any longer. I got to make the move. 2025, we're not even talking about rates getting back down to 3s and 4s anymore, right? This is an adjusted market. We're living with the fact that rates are probably going to be low 6s, high 5s. Sellers are helping buyers get better interest rates to get payments that make sense to make this work. So when we're talking about a dramatic cut from 40 days to 22 days, so from getting pre-approved, we're taking 3 weeks to find our house and go under contract. We're getting back to what a normal turn time, I would say.
Good. I mean, and that's what, as we're looking forward to 2026, we make fun of it all the time. Like the crystal ball is broken. It does
so
not work.
So broke.
And a skilled lender, a skilled realtor, like us that we know the market. And this isn't just for people that are watching that are interested in the Greenville market. Like that's just one market. This is a little bit more of would you say this is a national scale?
Yeah, I would say so. Because what I found interesting as I study the Greenville market, we reflect national numbers pretty well if you talk about proportions.
Okay. Yeah. So going into 2026, so we keep hearing this, 2026 is the rebound market, the market that this is going to be, we're finally coming out of 23, 24, where the market was hard, and 2025 was a beast of a market. And it still is. What are you telling people as we're going into 2026? From your experience and expertise, what are you letting people know?
Yeah, we're buying the house because we need it, right? We're not buying the house because the market says we should or shouldn't. So you described it earlier on my process, right? We talk about options. We explain your situation. And we figure out how to make that work. That's the message. That's actually been the message for the past 2 years, 2+ years now. And I think that holds water in 2026. It's going to be the same conversation there. So instead of, it's hard to time the market in anything, whether stocks, real estate, right? Best made move was yesterday. So what it is more about how do we put a roof over your head? How do we make financial sense of it so you can keep that roof over your head? And putting that plan forward with them. So that would be for 2026.
Do you think for the people that are hanging out waiting for interest rates to go down, or are you same answer?
If you're waiting, well, I try to talk to people with grace, but since I don't have a direct person today, it's just you and me. I would say for waiting for rates to go down, first question is to what? And I've actually asked that to people.
Okay.
What is that, right? Because a lot of times when we talk through emotions, we talk in generalities, right? When we talk about data and facts, we can be specific. So if you don't have a plan, and you don't have an idea of where you want to be, you're never going to get there. So the question would be down to what, right? How can we get there? I've literally had someone tell me if I got a rate at 4.75, I would do it. All right, cool. Put a plan together. We talk about seller credit.
Do it.
Yep, and we can do it. So those are the conversations, if you are thinking about buying a house, that you need to have with a lender, with a real estate agent, of figure out what it is that you want, where you want to be, and let's see if there's a path you can get there.
I think the conversation around affordability, like housing prices as well. This is a very similar conversation. People go, well, I want to wait for the prices to go down. Well, to go down to what? And then say, okay, well, is that even feasible? Because we have a great recession to compare to. And like where housing prices majorly corrected.
Yeah.
And it's like, well, go down to what? What is affordability to you? Is it a monthly payment? Is it a housing number? So for 2026, the kind of the sad part about it that I think for a lot of people is, at least here in Greenville, South Carolina, I'm seeing housing prices continuing to rise. So those people who said, well, I'm just going to wait for everything to change or for everything to adjust, they're getting priced out of the market. But then at the same time too, we are just continuing to go up in price. Like I've got people that are going and buying houses before their house is even on the market. And I'm like, put your house on the market. You got time.
Right.
Like this is how our market runs. We've got 2,000 to 3,000 more homes on the market these days at every month than we did 2-3 years ago.
Right.
So I think that's something to talk about too. So I think 2026 is, I don't know, I keep hearing this rebound market, this, breakout, like all of this. And I don't know, maybe we'll get those buyers that are sitting on the fence. They're waiting. They're going to.
Well, it's trending, right? It's trending up.
Yeah.
Housing market's trending up. Zillow's predicting the upstate, South Carolina values to go up 2.4% next year. So if it's a $300,000 house, I'm just going to do a 2% increase. Now that's going to be 306. So we're going in the wrong direction if you're waiting for home values to go up. You mentioned the Great Recession or the Great Financial Crisis, GFC, as I've said. A lot of time we try to dissect it and figure out, it was a credit issue. I'll tell you, I was thinking about it today. I was like, if it gets brought up, I wanted to say this. The reason why we saw home values drop so significantly between 2008 and 2010 is not because the housing market went bad. It's because job loss. People lost their jobs. They couldn't pay their mortgages. Yeah, that's why the housing market went bad. Now, mortgages were involved. The finance sector was involved for that happening. But the big reason why that happened was because people lost their jobs. They couldn't pay their mortgages. Yeah. And we know you flood the market with homes that needed to be sold and they're all foreclosures. You're going to have home values go down. This is different. Yeah. You've got people who have interest rates at 2.5%, 3%, 4%, who can make their mortgage payments. They're good in their jobs. Sure, are there people that we're seeing a slight rise in distressed home sales? Yeah, but that was expected. That wasn't shocking to anybody. So I think the market's still strong. To your point, 2026, we go into it. I think we're seeing sellers starting to be more creative, being open to seller credit. That's giving buyers an opportunity to get a great deal. I have to use quotations. I hate saying good deals on my end of things.
Everybody wants
I call it a good plan. We can get a good plan. So 2026, the market is adjusted. Now the market's, we're seeing people get creative. I agree with what they are saying.
Yeah, all of that. So I think 2026 is going to be a really good year. I think that people that are waiting should, if they have, honest to goodness, like good reasons for waiting, yes, absolutely. Like don't feel any guilt trips from us for waiting. But if it's just because of waiting for prices to go down or waiting for interest rates to go down, that's just not a good reason. If anything, you're pricing yourself out of the market. So, and we've watched, me and you both, Brian, we have watched people do that over the course of the last 5 years. And it's sad to watch it because you're like, they think they're making such a great decision to wait. And then you find out that it cost them $75,000. So it's a big conversation. It's one that like I geek out over this stuff. I thoroughly enjoy it. So, all right. we're at the end of the night. Is there anything that you want our audience to know about? We'll just open it up about Greenville or about mortgages or why they should, like, obviously they should call you or have us connect you if you're thinking about making the move. But is there anything that you want to kind of leave them with tonight? If not, that's fine. I'm putting you on the spot.
Very good. I would just say the number one thing that I've noticed over the past 6 months now, so we can call it second half of this year, I've noticed more people who are getting pre-approved without a plan. They're getting a pre-approval letter for a certain dollar amount, but they don't know their payment, they don't know their interest rate, and they don't know how much money they need to bring to closing. So they're super excited about being pre-approved to buy the house, but they don't have the details. So one of the things that
they're not pre-approved with you.
They're not. It's not with me, but it's funny because I love Aubree. I have no problem with being on a list, right? I'm happy to be one of the preferred lenders or one of the lenders on the list, to be that second, third voice for someone. But one thing I've noticed that, and I encourage this, there's loan officers in our area that I talk to, and I encourage, and I say, hey, when you have clients and you're talking to them, how are you helping them plan? Because that's the most important thing. How are you showing them options? Because it's more than just an interest rate, right? It's more than just getting a pre-approval. But if you're going to go buy a house, you need to understand what your payment is, how much money you need for closing, what's the ramifications of that for 3 to 5 years. Breaking that down over several different options, I think that'll make you a smarter home buyer. You'll be happier with your financing decision for the next 5 years. So that way you're set up for success.
Very good. I think that's very good. My one thing is you guys need to just contact Brian for your financing. So that's the thing. But also, I'm very excited for 2026 and where I think our market is going, where Greenville is going. I know we didn't go very specific on Greenville tonight. I'm usually very specific on things local, but I thought this conversation was important, especially as people, like you just said, they're getting pre-approved without a plan. Like you need to get your approval, or even like the question around, am I going to buy a house with cash versus getting a loan? Like that's all part of the plan and making sure that you make a really good decision. So anyways, awesome. Well, Brian, thank you so much. I appreciate you jumping on, chatting with us for an hour here tonight amidst all of our technology difficulties.
Thank you for having me.
And we'll have you back definitely again as we start the new year and we are again making that plan. If you are watching right now and you want to get connected to Brian, or hey, you're like, you know what, Aubree, this conversation made me think, yep, we just need to go ahead and do it. We know Christmas is in like 2 weeks, whatever. So let's do that. Scan the QR code that is over there next to Brian's head and with the highlighter, and we'll do that. Oh, my camera.
Your camera said it's tired.
You know what? My camera said it's done. All right. We'll chat with y'all later. I'm done. I'm not even going to bring it back. I'll talk to you later. Bye.